Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Charles Schwab. We have Adam Sarhan on the line, and he is the founder and CEO of Sarhan Capital. Adam, how you doing this morning?
We're doing great. How's everybody in your world?
We're doing good here. Monday morning, Michigan had a football victory, so I'm in a good mood for today, at least. Let's talk a little bit. We run a couple different services here, three primary services. Could you tell us about them and a little brief description?
Yeah, absolutely. Sarhan Capital, the website sarhancapital.com. It's a boutique investment and advisory service. We offer three main services. We offer asset management for people that want to have us manage their money. We offer an institutional advisory service, which is a service dedicated to small and medium-sized portfolio managers that need better ideas and don't have access to research from the big banks. And then we also offer an individual stock markets service and options-based service via findleadingstocks.com or marketvalor.com. All that information is available on the primary site, which is sarhancapital.com.
Okay. All right. And so what an October in the market here. Middle of October, were you hiding under your desk there figuring out what to do next? Or did you keep your composure and able to hold on to positions and maybe even buy some new stuff? And on the flip side, right back at new all-time highs. What's your outlook up here?
Yeah, I mean, basically, the outlook now going forward is that the market is still very strong. We're in a bull market. It could be argued that the latter stages of this bull market is aging. I'm not here to worry too much about semantics, but what I'm looking at is the underlying price action of the market and then couple that with sentiment. So far, up until October 1st, let's just rewind the clock about a month.
Okay.
We saw a very healthy bull market. We had two primary pullbacks or corrections, if you will. One was when QE1 ended, the S&P fell 17%, and then it fell 22% when QE2 ended. So QE3 ended at the end of October, and leading up to that, there were jitters in the market. The S&P fell 9.8%, almost at 10% threshold, which typically defines a correction. But the bull stepped up right at that 9.8% level, didn't even allow the S&P to fall 10%. And that in and of itself was extremely strong and bullish. So at the beginning of October, we were in a strong bull market, and everything looked great. And then all of a sudden, we had another one of these nasty and violent pullbacks, and it really, at that low on October 15th, it looked like the market was going to fall and go down much further. We had large topping patterns forming. A lot of the technical indicators we look at were acting weak, and the fundamentals also, people were saying, okay, QE's over, ... But then, lo and behold, a few of the Fed heads came out and said, you know what, we don't have to end QE in October necessarily. More importantly, we can have QE4 if the market needs it. So for the longest time, the primary driver, we've argued to our clients and to the media, that the primary driver of this entire 5.5-year bull market has been easy money from the Fed or QE. Now, what happened was QE ended from the Fed, but Mohamed El-Arian, one of the famous investors of our time, came out last week and said the QE trade has evolved. And that paraphrased what we were thinking, and we said that the Fed put has now shifted to the central bank put. And that was the title of our report over the weekend, which basically came out and said, okay, that QE trade, that primary driver, is still alive and well. It's just shifted from the U.S. Fed to other central banks, like the ECB or the Bank of Japan, China, ...
Okay.
And the other point, too, is that even that QE's ended, the Fed still has an easy money stance. Rates are at zero. And they've made it clear that if the market or the economy, Main Street or Wall Street gets in trouble, they'll step up again. And that's the bullish fundamental backdrop for stocks.
Okay, what about? So you've had a lot of stocks, and we were talking earlier show about stocks, a lot of them making new all-time highs, and I guess if you're a momentum trader, those are the ones that you want to be buying. But do you think that there's anything for one reason or another that's just kind of been left behind, and that may still, because if you're having problems, buying tops and highs, even though it seems to be the preferred method of making money. Is there any sectors or individual equities that still may have some upside in them, but haven't taken off yet?
Yeah, no, I would definitely say there's a lot of areas that there's offering good opportunity now, especially if this bull market continues. And I'd look at the financials. The financials typically tend to be the primary beneficiary of all this easy money sloshing around from the Fed and other central banks. So if you're on that train as far as easy money is here to stay, which it's I mean, everyone's made it abundantly clear that it is. The financials are definitely poised to go higher. You can also look at this stage of the cycle. Utilities have been leading most of the year. The healthcare sector has been exceptionally strong, and then large cap tech stocks have acted very well. And Apple, we do have a position in that, and I've owned it for most of this year, has done phenomenally well for us, and is still undervalued from a normal PE standpoint. Its PE ratio is below the S&P 500, which is very attractive. It also offers growth. So value investors are attracted to Apple even at these levels, and growth investors are attracted because of their ability to continue to grow their earnings and their sales and their return on equity and return on investment, and all the other metrics you look at are still extremely attractive. In the short term, the stock is a little bit extended, so I'd wait for a pullback here, but it's one of those names where it's very well positioned to move higher, especially if this bull market continues.
Do you have an upside target for it?
I would say the first target is about the 125 area, but then really the sky's the limit, because all these price targets, as far as I'm concerned, they're more along the lines of, hey, where are we looking for it to go? But once it gets there, then what? So everybody raises their targets. The way that we use targets is more along the lines of a little bit different than most everybody else, is we say, okay, we're here now, and let's focus on the now, and then say, okay, where's most likely the next place it's going to go? Is it going up or is it going down? So remember, any stock or any market, no matter what you look at, whether it's equities or even currencies or commodities, there's only three things it can do. It can go up, it can go down, or it can go sideways. So we try to keep things as simple as possible and make decisions when the risk-reward is favored in our direction.
Okay, as we're speaking here, there's bullishness. The S&Ps have pushed up to 2016 and a quarter. The all-time high from the pre-market session resides at 2016.75. So nice run here while we've been on the show. So let's shift gears a little bit away from stocks, and let's start talking about commodities here. And gold took that flush out at the end of last week and has not been able to retake the $1,200 level. I don't know if you're a fan of Barron's at all or whatnot, but they came out with the contrarian plays in the commodities markets. Let's start with crude and gold, and let's just give your outlook. Are you putting any of your good money to work in what has been bad investments in commodities?
It depends on how you define bad. For the long investors, it's bad. For the short investors,
Okay.
It's good. A month ago, I was on your show. I said I was short crude. We've done well in that trade. I am short now gold, for full disclosure, and I'm long equities. I'm also short the euro, but that's a separate issue we'll get to later. But basically, from a commodity standpoint, it is bad from the long-only investor standpoint, but it's good for the shorts. And the idea, the underlying dynamic there's a few points that are driving commodities lower. Number one, U.S. dollar is moving sharply higher. So when these commodities are priced in dollars, when the price of the dollar just shoots up, I mean, last quarter we saw the dollar rally every single week, and that was one of the strongest consecutive weekly gains in the history of in modern history for the dollar, and that put a lot of price pressure on these commodities. The second thing is a lot of the fear, especially with crude oil, but also with gold, because gold tends to be a good hedge against inflation. It's also a fear gauge, So there's lots of usage for gold. The reasons why people flock to gold, the safety trade, But really, that fear that was there at the beginning of the summer, whether it's Ukraine, it's Putin, it was Israel, Gaza, it was whatever, enter your negative headline du jour, all that dissipated. Thankfully, that didn't come to fruition. Even with this Ebola stuff going on, it's still relatively not, I don't want to even use the word contained because it's a horrific event happening in West Africa, but as far as the contagion factor spreading to the rest of the world, it's still at a snail's pace. So that whole fear premium that was built into the market at the beginning of the summer is just taken out because those events did not occur. Russia did not invade Ukraine. Israel and Gaza, more or less, the issue was relatively contained. So that took a lot. Iran is still at bay. They don't have nuclear weapons just yet, and they're talking to the West. So that's also a good sign. And that's been a big reason why the price of commodities have come down. The other point is that the global economy remains sluggish. So when you look at commodities, a little bit different than stocks, the basic economics 101 teaches us that price is a function of supply and demand, right? So the supply more or less has been stable for most of these commodities. Of course, the U.S. shale production's helped, increase supply. That's put downward pressure on crude. But the demand component for commodities across the globe, due to the sluggish economy, has been lackluster at best. and that's put a lot of downward pressure on commodities.
Okay, so you think this contrarian play, you need to see a little bit more evidence of in the fundamentals before you join along.
I would want the technicals to line up as well. I mean, I understand the contrarian play, and you can make a lot of money buying things on the way down. But there's all from the value investing. It's an art. There's an art to value investing, just like there's an art to growth investing and technical investing and stuff. But with value specifically, it's very important for you to, for me at least, the way that I found it to work best is for wait for that low to come in, and then wait for the market to confirm your thesis that the lows are in and it's starting to go up. That's when you make your money in buying the bottoms. When you try to arbitrarily just throw a dart at the wall and say, hey, I'm going to buy this because it looks quote-unquote cheap, you're trying to catch a falling knife, and then you can just get slit and stopped out or just have huge losses on your book, carry them for years because you quote-unquote think it was cheap, but the market didn't think it was cheap. So I always want to see what the market's opinion is and then jump in after that turn has happened. If I think gold and silver are getting cheap, okay, I'm short now. Eventually, it's going to bottom. When it does bottom, then I'll step in and buy. And if I'm wrong and it continues going lower, I'll quickly get out, take a small loss, and then be short again. But my whole goal is to follow these trends. I don't want to fight the tape, ever.
Okay, well, so what do you use to determine a bottom? And let's just go to a crude chart here, and I mean, rounding bottom here. I mean, it's holding the $80 level. I mean, what do you need to see on a daily chart in crude for you to take a stab on the long side? And then I also like what you said. You're short. You're going to take a stab on the long side, but you also have another plan in mind where if you do roll into that long, it doesn't work. You're going to get back on you're giving up, by staying short, obviously the trade in the long. What do you use to tell you? Like, what are you looking at here in crude basis the $80 level?
So, yeah, that's a great question. I mean, the way you define a bottom, it's always a rearview mirror phenomenon. It's very, very difficult to define it in real time. You can probe it and test it, but we always say, even on our website, all our research, we're not trying to pick a top or bottom. We're trying to capture the bulk of the move, up or down. So that being said, the way that I define a bottom, or I trade a bottom, to use that information in real time is I'll use weekly charts primarily to define those bottoms.
Okay.
Because I'm looking at different time frames, not just the daily time frame. I want to make sure that the intermediate and longer term trends on the weekly chart, the monthly chart, even the quarterly or annual chart are aligned in my favor as well. Once those turn, then you know that the bottom's in place. Now, you can probe it on the daily chart by looking at weekly highs or weekly lows. You can look at moving averages. You can look at a rounding bottom, a cup with handle bottom. You can look at inverse head and shoulders bottom. There's lots of these different patterns that emerge. But what I want to see, right now, crude is doing its best to hover around 80. It's doing one of two things. It's either consolidating the recent and very sharp decline from 107 more or less down to 80, which is a huge move in crude in a short amount of time, or it's trying to bottom and move back up. My guess, it's consolidating, and then it's going to continue going lower, just based on how weak this tape is and the fact that it's the inability for crude to bounce. So what I would do if I'm looking to get long this thing, which I'm not at this point, but if I was, I would say, okay, let me draw some trend lines, or more importantly, let me look at some weekly highs, let me look at some moving averages, and then if crude starts to rally and take out level after level, then you can probe it with an intelligent fashion, because if these lows are taken out, obviously the downtrend is going to continue.
So
and that's it.
is there price action in one day that will change your mind, or
No.
do you need a weekly level that you would use?
Yeah, typically I'll use. I do most of my research when just like Nicholas Darvis, from that famous investor from the 60s and 70s who had that book How I Made $10 Million in Stocks. He said he did his best work when the markets were closed. And for whatever reason, about 15 years ago, 20 years ago, when I read that book, it really resonated with me very, very well. And I realized that I do my best work also when the markets are closed. So our research, you can get it at findleadingstocks.com. If you want a coupon code for your listeners, they can type in WIN10, WIN10. They can get 10% off and test the service. Everything that we send out goes out on the weekends. All our orders, again, there's only three things any market can do, up, down, or sideways. We're prepared for any of those three outcomes. And that's it. The entries are in, and if we're filled, if we get in, we know exactly where we're going to get out and how much we're going to lose if we're wrong. And the stops are in both in and out, entries and exits, up, long, and short, and that's it. We let the market guide our hand. Now, very rarely do we also offer intra-week updates with the service, but as far as buying and selling in the middle of the week, we try as much as possible, unless if there's a huge move, to wait for the weekend, let the market close, and then reevaluate everything at the end of the week, and then make a decision for the next week. So
And you
right
know,
now, for this week coming up, the game plan's already in place. We know exactly what we're going to do. If these levels are broken, we're going to either short more or go long, or exit our shorts or exit our longs, whatever the case may be.
yeah, I mean
And this
that's
way, there's no second guessing.
yeah,
That
no, that
removes the emotion from the equation.
no, that's an important thing. Sometimes when I'm doing my charts, my analysis over the weekend too, it's just like you can't wait for a level, you can't wait for a trade, and a lot of times those ones that you think about, you do your analysis, you have a predetermined risk reward ratio. Those are the ones that are work out. Aaron, before I let you go, I general talk here. Are you more leaning towards stocks when you're looking to invest? Are you more looking into momos, or are you looking for some of these old steady eddies that pay the dividend and just long solid companies? Because the reason I mention that is you've had Twitter come quite a bit off of highs in the move. Facebook, people seem to be stuck here at the $75 level. LinkedIn staged a nice recovery from all-time highs. Tesla, do you look at those stocks, or they're just not in your wheelhouse?
Yeah, no, absolutely. FindLeadingStocks.com is our primary service. It's available for everybody. The service is a few dollars a day. It's less than $3 a day. You can even try it for free. I recommend everybody go there. It's a great tool in your toolbox, and that focuses on leading stocks. So I'm agnostic. It doesn't matter to me anything except for the price action of the stock. I want to see what the strongest stocks are in the market. I want to focus on them like a hawk. And typically, they tend to have strong fundamentals. Not always, but typically. So as far as the momentum, not momentum, labeling it value and growth, all that's out the window for me. I just want to see what is the market's opinion, where are big investors moving their money, and what are the strongest stocks in the market. In other words, if I ask the average investor, even institutional guy, hey, give me the top 5 stocks in the market in 2014, this year, I almost guarantee you no one can answer that question. That's why I created the service. And that's what we focus on. Not top 5, but we give you top 30, 20. And then we have special reports. We have intra-week updates. We have annotated charts. We have new trade ideas. We have a model portfolio to tell you the exact entry points and exit points. So that's why we created the service, to give you a way for you to sink your teeth in and focus on these stocks that are leading at all times. Now, if they're slow dividends or utilities happen to be a strong area this year, we'll focus on those. If they're hyper growth stocks, like they were earlier in the cycle with the Russell, a lot of those names were taking off and going, we'd focus on those. But typically, or actually, we do not focus on penny stocks. We do not focus on illiquid stocks. So we do have minimum guidelines, and we tend to look at minimum as small cap or higher. So we do have downside targets, but as far as we try to focus on large liquid institutional names.
Okay, Adam Sarhan, founder and CEO of Sarhan Capital. He runs 3 primary services: an asset management, institutional advisor, and findleadingstocks.com. Adam, thanks a lot for a look at the market here, giving us your projections and your ideas for investing. Very helpful to me and as well as our crew. We hope to have you back on again soon.
My pleasure. Thank you.